What's up, everybody? Today, we're going to be going over a beginner-friendly way to get into day trading. Day trading is a little rough. That's okay. I'm sure you guys have probably watched some other videos before this one and you've seen that. But in this video, I'm really going to break it down for you guys. I'm going to show you guys how to, go from your unprofitable trading self, somebody that wants to learn but doesn't exactly know where to start. And I'm going to try to compile everything into a short and digestible video for you guys to consume. So stay tuned and let's get ready how to see fuck English. Let's get ready to see how to trade. Let's fucking go. I lie, that's why I'm basically how I find my daily bias every single day, every single trading day is as follows, right? I'm going to mark out 9:30 in the morning EST. I'm also going to mark out 3 in the morning EST. Make sure your shit is set to New York. Okay, because we're trading based on a New York stock exchange. You should probably have your shit in New York. Right, so then I'm going to mark out, okay, where's London session's highest point? And then I'm going to mark out the lowest point. From there, I'm going to look at Asia. Like, okay, there's some pretty significant points of liquidity to the upside here. Then I'm going to go to the hourly. I'm going to see what are we doing on high time frames, because that's going to tell us where the market really wants to fucking move. Shit. Alrighty, so from what I'm seeing right fucking here, our weekly lows are down here, as well as some 5-minute points of liquidity, which I think are fucking like previous day lows. Well, those are right there, but yeah, it's like 2 days ago, previous day lows. Fucking. Right, so that's the only point of liquidity to the downside. To the upside, we have several points of liquidity that aren't as heavy as the weekly low. So what do I think price is going to do? My bias right now is that price is probably going to either come up this way, grab liquidity and reverse, or off of this equilibrium point, price is dead ass just going to reverse down right away. And I'll get into equilibrium a little bit later. Right, so my bias today would definitely be bearish. I think price is going to move towards the most likely spot for it to go to then fill and stop out all of this liquidity to the upside, probably hitting weekly highs as well. Right, so that's how I find my bias. Let's get into the next point. Alrighty, guys, now we're going to be talking about each one of my confluences, how I use them, and how they all kind of come together. So first things first, what we're going to start with is both of our continuation confluences. Alrighty, so a continuation confluence is going to be how we decide whether or not that trend, it can either be bullish or bearish, is continuing or if it's reversing. Starting off with equilibrium, what equilibrium is going to be is it's going to be the Gann box. How you find the Gann box is you click over on the left side where the Fibonacci retracement tool is. You go all the way down to Gann box. You click that. Now it should look like this. There should be no vertical numbers. It should just be the 50% line, 1 and 0. How we use the Gann box is we would expect price to, be coming down, makes this low, and then for price to come, oh shit, it comes like this. Price is coming down, makes this low, price reverses up, fills equilibrium, and price goes down. Now, why does that work? Like, why am I even using this as a confluence? When you're thinking about equilibrium, you need to be thinking about selling in a premium and buying in a shortage or a discount, right? Because why would you want to buy multiple products where the price is bigger? It's at a premium. It's the most expensive it's ever been. Wouldn't you want to wait until that product was at a discount so you could buy more of them? Yes, and that's how market makers are thinking about this shit too. Right? They want to wait until they can grab some of this equilibrium to then, okay, I'm going to set my stop loss up here because we're going to be making the market go down. That's how we know the trend is continuing. When price comes into equilibrium, okay, they're now in a premium, time to sell off, and vice versa, right? So let's say in this case, we're moving up, right? Let's say we're moving up. We're going like this. Boom, boom, boom. That's what that would look like. Okay, price makes a low, price comes up, makes a high, retraces down into the equilibrium point. Okay, now we can buy more because we are in a discounted price. Think of the bottom of it in a buy position as discounted. The top of it is premium. Why the fuck would you want to buy more of them in a premium? You want to wait until price dips into a discount to buy more to then go high and set your stop loss up here. That's how we're catching these moves. We're catching them so quickly and before they move because we are using continuation confluences the way they should be. But it's important that you guys know the correct thinking about them as well. So a little actionable. Go research everything you can research on equilibrium. Like go deep dive, fucking study that shit like you have the ACT coming up. That's how you should be treating your fucking life. Like, holy shit, I need to know this as quickly as possible. I need to just fucking take this all in. I need to be a master at this. Now, mastery obviously takes time, so don't think this shit's gonna come in a day. But have a sense of urgency. Alrighty. Now, what we're going to be doing is I'm going to be showing you guys what equilibrium looks like on the charts. Alrighty, here's a pretty fire example of equilibrium in action. In this uptrend, it looks good. You know, we broke structure on 2 of the highs. I would be sitting here like, okay, I want to wait for a continuation. I'm not going to enter this bitch now and then have a reverse on me. What happens? It reverses, flicks equilibrium, goes higher up. I mean, shit, we're in equilibrium right now. Oh, this is a solid ass point of equilibrium. Literally fire as fuck. What do we see? Price comes up, price flicks, price skyrockets. Like, okay. What do we see here? Price comes down, price comes up, price goes down hard as fuck. And you mark it from the lowest point of the move to the highest point of the move. What happens? Price comes down, gets close to equilibrium, price reverses up, continues to move up. But the next point that I really want to talk about, because I feel like it's super important, is fair value gaps. Probably one of the most important confluences that I use. And I'll show you guys why here in a second. Right, so a continuation of the trend. We'd be looking for fair value gaps to fill. Obviously, right now, there are no fucking fair value gaps because market hasn't opened yet. But let me go and look at past days to be able to give you guys some pretty solid ass points of equilibrium. All right, so right here. All right, check me out. This right here is a fair value gap, right? Well, price didn't respect this fair value gap at all, and we see the price came up and swept more liquidity, right? That's what we call an inverse fair value gap. Now, inverse fair value gaps are confirmation confluences. Different between our continuation confluences. Continuation confluences are telling us, okay, the trend is continuing. A confirmation confluence is telling us the trend has changed. Right? So think about it like once I get confirmation on high time frame that price is changing, I'm then going to drop down to the lower time frame, 5 minute, 1 minute. I'm going to wait for a break of structure or an inverse fair value gap in the direction that my bias is. That's when I would enter the trade. After that inverse fair value gap or that break of structure comes about, that's what I'm going to enter because I now know here's the confirmation that price is no longer going to move in the same direction, and I've already had continuation that the trend is going to continue to move this direction. But let me find you guys an actual fair value gap. So this is a bearish fair value gap. How you know? It doesn't really matter about this candle or this candle. It just, these wicks can't be crossing each other, right? So this wouldn't be a fair value gap because this wick is pushing through this wick. But the wicks created a gap in price. What does price typically want to do? Come up, fill that, and then continue the trend to grab the liquidity that it needs. What do we see? Price comes in, comes out, all the way fucking down. You could have taken this trade easily, right? Because check it out. We wait, it's 11:50. If you wanted to take this trade, you wait, boom. Price fills. You're like, okay, this could be a continuation of the trend. However, we did have a 5-minute break of structure here. Book it. You could enter in once price gets here, set your stop loss up here, and take profit all the way down here and still have like a 3-to-1 risk to reward. Here's another one. What does price do? Price comes up, retraces into the fair value gap, and I think it also retraces into equilibrium. Yeah, it does both. Now that we've talked about fair value gaps and equilibrium, we're now going to be talking about our confirmation confluences, and those are going to be a break of structure as well as an inverse fair value gap. What a break of structure is, I'm going to show you first on the charts. We're actually in one currently. So, whenever you're thinking about a break of structure, it's not a wick pushing further than another wick. That's what some people like to get shit messed up on. That's a higher high or a lower low, but I don't consider that to be a break of structure, and some other traders don't too. What I do consider to be a break of structure is a body being broken either above or below by another body. So we are already in a bullish, like, break of structure situation. In this situation, I probably expect price to come up, like I said, to grab liquidity to the upside before coming down. And honestly, that's what it looks like price is going to do. It looks like price is going to come up to grab liquidity and come down. But price could just continue up. Right? It's too early for me to make that decision. But an inverse fair value gap is also important, and that's literally right here. What do we see here? And here, but I'll talk about this one first. This is a bearish fair value gap, so price should want to fill it and continue to go lower. What happened? Price broke above it, retraced down, and broke above it again. And honestly, I think that was 5-minute equilibrium that it broke into. Yeah, it touched 5-minute equilibrium, and now it's coming back up. So it's further proving my bias of, okay, I think price is going to come up, grab liquidity, and reverse down. That break of structure proves that price wants to go higher. That inverse fair value gap means that the trend has changed. That continuation of into equilibrium on the 5-minute to then a break of structure to the upside tells me that I am correct. Hopefully. Now we have to survive, market manipulation until 9:50 and then try to take a trade. All right, it's now 9:50. What happened? Price came down to grab liquidity to the downside, and now it's reversing back up. Okay. What do we see here? There's a fair value gap. Let's see how price reacts off of that, but I definitely think that they're going to take these highs here. And then we also have some two previous day highs stacked on top of each other over there. This could be a fire-ass move. Let's take a look. Waiting for a retracement here. I wish I would have been on the 1-minute time frame for that shit, because that's equilibrium on the money. I would have entered off of that bitch. I'm going to go to the 1-minute time frame here. We see an inverse fair value gap there. It's probably going to break above here. No. All right, at 10:05, price hasn't done much. We broke here. We're in equilibrium. This could be the move. This could be the catalyst for us to go down here. But we broke this 1 minute fair value gap. Oof. What does price want to do? Yeah. Looks to me like we're going up. All right, what does the 5 minute look like? All right, we filled equilibrium. We are now going back down. I'm not taking this trade yet. Yep. Fucking thought so. All right. All right, we broke structure to the downside. I'm going to go ahead and sell here, setting my stop up there. Take profit are going to be... I could literally just have my take profit be that low. Boom. All right, now let's just say I'm still in this fucking trade. I'm waiting for a continuation of this trend here. We just fucking got it, unfortunately. And look at that fire-ass liquidity sweep that I just missed. Fuck. Alright. Liquidity's gonna have to... We're gonna have to get high up there for me to take that shit. Alright, this is important to note. In one of these moves, if you see an up candle and they don't just continue to go up, one of them goes down, equilibrium is now obsolete. Delete the equilibrium chart, because that is price telling you that it doesn't need the liquidity to continue. You can just scrap it. Now the market is continuing to move in its direction unless you see a break of structure to the upside. All right, sell here. Stop at $500 of the loss. I'm up $1,200 right now. Set my stop. All right, my take profit right here. I really do this shit. All right, and then do we hit more points? Hell nah. So look at that. Bada bing, bada fucking bam, baby. 1800. 1800. 2 trades hit successfully on the fucking money. Right? So that's kind of how you put all that shit together. I just showed you guys in real time. You guys should be going back and watching that shit like over and over and over and over and over. Guys, until you can close your eyes and tell me the strategy that you use and how everything works and when you would enter and when you wouldn't, you got to continue to go more. Right? But listen, guys, let me see if there's anything else that I said I needed to talk to you guys about. No, that's pretty much it. If you guys want another video on something specific, put that shit in the comments. If you guys want more of these like fucking school study time videos, we can go for that. Also, I could make up like a frequently asked questions or questions that I would probably be asking, and then I could answer those in another video if you guys want. But show me you guys actually want that shit, and more shit will come. I'm doing this shit for free. Alright, but love you guys. That was dope as fuck. See you in the video type shit.